Big question. Are you buying the dip?
Well, we're fully invested, and we're very comfortable being fully invested. I think our confidence in the bull market broadening out has increased in the last few days. So sure, the mega caps we think will continue to do well. Maybe Nvidia, there are some questions about its exalted position in the training chip market. We think inference is going to become more important with these new reasoning models, and that is a more competitive part of the market. But we think that what's happening here is the collapse in the cost of innovation. DeepSeek is adding to it. It has been happening, though. AI training costs have been dropping, led by Nvidia, 75% per year. And AI inference costs have been dropping 85 to 90% per year. DeepSeek is just putting those very rapid declines into a bit of overdrive here.
So I wonder if you see Nvidia falling much further. Is this an attractive price to be buying it, do you think?
Well, we own it in some of our portfolios. We are not buying the dip yet. We do want to learn more about DeepSeek and more about how the market or the demand for inference chips might outpace those for training chips. We think the whole area is going to be vibrant. We just think there might be a little bit more of an adjustment to this new reality.
Where you say that what DeepSeek shows is kind of that you can do more with less capex. Yes. Who do you think that's going to motivate in the US most, as Donald Trump is kind of saying? Who's going to be best at doing more with less?
Well, anyone using AI. We are focused on the productivity gains for knowledge workers, which are going to be massive. That's the biggest impact of AI. But if we're looking at sectors and spaces generally, where this acceleration in innovation is going to be meaningful, we think autonomous mobility, so robo-taxis, we think that's going to scale from essentially nothing now to an $8 to $10 trillion global opportunity, including China. But the sleeper here is healthcare. And we're seeing the convergence of sequencing technologies, all kinds of sequencing technologies, artificial intelligence, and then gene editing technologies like CRISPR-Cas9. That combination, we believe, is going to cure disease. It's already curing disease, sickle cell disease and beta thalassemia. That's CRISPR Therapeutics. But we think they're aiming now for type 1 and type 2 diabetes. That would be a category killer. So think about that. Curing disease, AI helping us decode the secrets of life, death, health.
Cathie Wood shocks the stock market once again and reveals the exact perfect time to sell and possibly buy the Nvidia dip while making the most amount of money. Cathie talks about DeepSeek AI and its impact on the wider tech market, suggesting there is more than one opportunity for Nvidia holders to come out with a win. As Nvidia prepares to announce its fiscal fourth quarter earnings, there's plenty of buzz about what the future holds. But what makes Nvidia such a compelling story right now? Let's delve into the details. Welcome back to Investocracy.
And we've got Elon Musk's first earnings call tomorrow since Trump's return to the White House. January, typically a call that's a look ahead. What do you need to hear from Musk?
We need to hear a continuation of we're about to launch our autonomous driving system. I mean, in effect, they've launched it. I have full self-driving. I know it's not allowed here in the UK or in Europe, but the improvements...
And you feel safe?
Oh, yes. Yes. Waymo really has broken through a lot of barriers. I feel even though a Waymo vehicle is not safer than a human-driven vehicle, it knows its roads, its narrow roads, meaning there are narrow territories. I think Tesla is going to go national. That's going to be, and will be able to do so because it has effectively 7 million robots roaming platforming the roads right now. I have two of them, a Y and a 3, and they're learning all about Connecticut and Florida roads. So it has a huge competitive advantage in terms of proprietary data that nobody else has about the roads, not only in the U.S., but in many places around the world.
Do you worry that Elon Musk is taking on too much? If he's got his new job in the US government, he's got, sharp developments coming in Tesla, lots going on with his other businesses as well. Is he spreading himself too thin?
If you look at the way Elon Musk behaves as a CEO, he's a sharpshooter. He looks for pain points and he solves those. Right. And he's, for example, right now, in 2018, where was the biggest pain point? It was manufacturing the Model 3, scaling the Model 3. He slept famously on the factory floor. He's not doing that anymore. He's not on the factory floor. Now it's all about autonomous. He is the first, what we would call CEO, who really understands the convergence among technologies taking place right now, really catalyzed by artificial intelligence, each one of his businesses. And he also understands how critically important proprietary data is. And think about this. Each of those companies is generating proprietary data that no one else has.
Well, maybe he should add to his plate. Should he buy US TikTok?
Yes, I mean, I know there have been rumors about that and about the government sharing half, and that's kind of anathema to the United States, the government getting involved like this. I'd be surprised if that happens, but I will also say the Trump administration is full of surprises.
Launched just recently, Blackwell anticipated to rake in billions by the end of February. And while a recent report from DeepSeek, a Chinese AI startup, suggested companies might be spending unnecessarily on AI, Nvidia's premium performance GPUs still boast unrivaled efficiency. Admittedly, the stock took a temporary hit. But remember, speed and efficiency win in the AI race, and Nvidia's tech has it in spades.
I think what it's telling us is the cost of innovation is collapsing, which it has been doing. I mean, the cost of AI training is dropping before this, 75% per year. The cost for inference, 85 to 90%. I think it throws the weight more towards inference chips from training chips. And so NVIDIA is highly exalted, and deservedly so, in the training chip space. Inference is a lot more competitive.
OK, do we fully understand the implications of that? Because the question that everybody's asking this morning is, do I buy the dip? So if we're seeing the landscape changing, is it too early to make that transition and understand what the implications of it are? Yes, we've been studying the tech stack and where we think it's going. We're going to put out big ideas in, I think, a week. Give us some hints. Yes, so here's a hint. We do think there are share shifts taking place within the tech stack. We think platform as a service, so think Palantir, is going to gain significant share. And this news yesterday, I think, highlights that, reinforces that. We think infrastructure as a service is going to stabilize the share. Software as a service will come down a share. However, I've said all of that. All of them will be growing rapidly. It's just how rapid.
Okay. And Palantir, we should say, is one of your holdings, of course, a company you know very well, Cathie. So if inference is going to become cheaper, is this going to be a situation that drives more demand? We were talking about, is that where the positivity comes from? For the companies that don't train but do infer, yes. How positive is this going to be? It's going to be extremely positive. So those using AI, whether for productivity or other applications, are going to benefit. We think the two most profound use cases right now, besides increasing productivity for everyone, autonomous mobility, so think cars, drones, and so forth, and interestingly, the healthcare space. We think the convergence of various sequencing technologies, AI, and CRISPR gene editing, that convergence is going to cure more and more diseases over time.
Moving beyond, there are two major reasons Nvidia deserves a spot in your portfolio. First, the company is due to report its Q4 earnings on February 26th, shedding light on how Blackwell's early performance impacts revenue. Given prior whispers of high demand, this could propel share prices higher. Second, Nvidia stands poised to capitalize on a $500 billion AI infrastructure initiative in the US. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Yes, I think competition is great for the U.S., and DeepSeek is competition, no doubt about it. I'm hearing all of the titans, tech titans, speak of it glowingly. I don't think we know everything about it yet. So, no, I think it's competition is good for the United States. Lowering costs is great for the world. The collapse in the cost of innovation should help all regions of the world. I will say that new productive forces, which was Xi Jinping's new phrase, I think 18 months ago, seems to be showing through right now. Common prosperity was the previous one, and I still think that's in effect. That was more about margins. This is about innovation. So we're looking more closely at China now.
As February unfolds, Nvidia presents a golden opportunity for investors seeking growth in the AI space. With impressive initial demand for their Blackwell chips and upcoming earnings likely to provide further validation, Nvidia's stock is positioned to surge past predictions. But what are your thoughts? Is Nvidia destined to remain the golden child of the AI revolution? Or is there room for another contender? Share your thoughts. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.